We've got to talk about Tesla Investor Day and the new preview out by Barclays. This preview just out. We got to go through what their opinion is of Master Plan 3. And I think that's really important to do because the Tesla event, the Investor Day event, actually occurs after the market closes. I mean, that's no surprise. It's no surprise that all the juicy stuff will occur after the market closes. In fact, I can give you the schedule of what we're looking at for Investor Day. At least I think I can. I have that here somewhere. But anyway, most of the activities and most of the actual announcements we expect to occur in the second half of the day. Here we go. 11 a.m. Today is event check-in. All of these times are Central Standard Time. 11 a.m. is event check-in. There will be factory tours and Plaid demo rides. Doesn't particularly say that there'll be any kind of demo rides for the Cybertruck, but maybe there will be, who knows. It says Plaid demo rides. That will go from 11 a.m. to 2:45 p.m., and I believe Tesla's starting to live stream at 1 p.m., but I don't actually expect anything to really occur until the keynote, which the keynote address is set for 3 p.m. Central Time. That's 1 p.m. California time. The keynote literally starts the moment the market closes. So kind of interesting. Q&A will be from 4:30 to 5:30 p.m. and then there will be a meet and greet between 5:30 to 7 p.m. 7 p.m. So 90-minute meet and greet. Anyway, so what does Barclays say for the Investor Day preview? Well, let's take a look at that right now. So their preview reminds you that I have timed the expiration of my flash sale for today. Yeah, sometimes there are more coupons on the channel, but you know what? The price trends up over time. So if you want to guarantee the best price, and if you ever think you need a price adjustment because you didn't get the best price, just email me, kevin@mekevin.com. But if you want to get guaranteed the best price, guaranteed, you buy today. Because if the prices go up over the time, you want to lock in that lifetime access. Even if you're not ready to take the courses yet on 0 to Millionaire Real Estate Investing, you're like, I'm not going to buy a house until 6 months from now. I'll learn it. You may as well lock it in now because you'll end up saving money. A lot of money. Same thing for the Stocks and Psychology of Money group or any of the other programs on Building Growth. Today is the flash sale, and that means prices go up tomorrow. Again, you get lifetime access to not only new lectures that are added, I keep them updated, course member live streams. If you join the Elite Hustler group, we do a Saturday sort of mastermind live stream together every day. That's what's nice about that every Saturday is it's a smaller group. Course member live stream, though, is the perfect size group because we have plenty of time to answer questions, everyone's questions, mostly everyone's questions, and do fundamental analysis together. We do those right after the morning public live streams. Anyway, Investor Day preview, Master Plan 3 grand scale. Okay, great. Let's look at some of the comments here. So as a reminder, Master Plan 1 was number 1, build a sports car. Number 2, use that money to build an affordable car. Number 3, use that money to build an even more affordable car. And while doing the above, provide a zero emission electric power generation option. Okay, so that has somewhat been achieved. A lot of these plans have been, quote, never fully realized or have never fully materialized. But it's okay. It's sort of like you make a plan, and as long as you can trend in that direction, you're doing pretty dang well, right? So Master Plan 1, pretty great. Master Plan 2 was create stunning solar roofs, and those really haven't scaled terribly well with integrated battery storage. Those are doing pretty decently. Those are ramping pretty well, as well as the mega packs. Fantastic. In fact, a lot of Tesla bulls are saying, we got to start realizing the potential 50% margin that all of a sudden you end up having with mega packs, and you start putting that into Tesla forecasts for stock pricing. Oh, everything changes. Everything changes when you start putting mega packs into the Tesla analysis. Now, I personally don't like putting in mega packs into the Tesla analysis because I see it as the icing on the cake, right? I want to ideally try to stay somewhat conservative with my projections. And I say somewhat conservative because I think they're already on the more bullish side, right? We know that. If Tesla can manufacture 4 million vehicles in 2025 at an average selling price of $47,000, I align with a lot of the industry on this average selling price. And if anything, my number of vehicles produced is probably on the lower side for 2025. But anyway, if I use this with only about a 10% take rate on FSD, on the number of vehicles, and then only 10% of those that money being realized in 2025. So it's basically the point of that is to say, hey, we're going to take the number of, hold on, let me make sure I have this right. We have the number of vehicles, 4 million vehicles. we're going to assume a 10% take rate. Okay, I actually have it at a 10% take rate. The reason I did a 10% take rate rather than the current take rate of 20% or the potential forecasted take rate of 30 or 40% by 2025 is because they did come out with a monthly option to pay monthly for this. So I don't think it'll all translate down to cash flow, although a lot of people will sign up for full self-driving as part of their amortization for their loan, which basically means Tesla's paying for getting the money up front. So I think I'm actually very conservative. Bottom line, I think I'm very conservative on a 10% take rate here. 25% margin, we know that Tesla's probably going to go to about a 20% gross margin. Their goal is 30%. I'm just going to go with about a 25% margin here. And I'm mostly going to leave energy and services out of this. I'll have a little bit in here for leases, services, energy. I have about 1% over here, and I have margin of energy of only 18%. Some people think you could massively 10x these numbers. You could probably have a margin of 50% here, and maybe 10x the energy revenue. I'm just going to call that icing on the cake, as well as a higher take rate for FSD. That's just icing on the cake for me. So in my opinion, as long as Tesla's growing earnings per share in excess of 30%, and we take a PEG ratio of at that level of about 1.6%, well, a PEG ratio of about 1.6% would drive us to about a $500 reasonable price target for Tesla by 2025. The present value for Tesla is about $210 per share, which gets you about a compounded annual rate of return of about 34%. That's pretty substantial. Now, that's not a guarantee, right? It's still pretty substantial. Not a guarantee, of course, but it's great. It's fantastic. So that sort of gives you just a catch up on this. So what does Barclays tell us here? Well, they talk about Master Plan 2, again, coming out with full self-driving, being much more capable, 10x safer than manual learning. So what is this next Master Plan 3 likely to reveal? Well, Barclays believes that their Generation 3 platform is going to be what we get revealed, and it will be the basis for the quote-unquote Model 2. Now, this is really interesting because I personally don't think there's going to be an announced Model 2 unless it's specifically for the Chinese market. I actually think the Model 3 is the Model 2. I think the Model 3 is what Tesla wants to reduce its cost in by about 50%. And if they can reduce their cost on the Model 3 by 50%, then that's fantastic. Because right now, you're running at a margin of, you're running at a cost of about $32,250 for the car. If they could reduce that to about $16,500, and they want to operate at a margin of 25%, well, now all of a sudden, you've got a car that probably could sell for about, let's see if I divide it, that car at actually even a 30% margin. If 16,000 represents 70%, there we go. You get a car that costs only about $23,000. So in other words, if they can reduce the cost of the Model 3 today by 50%, they could sell the Model 3 for $25,000 and actually make more profit. Phenomenal. So I actually personally think the Model 3 is the next Model 2, but ARK Invest thinks they're going to announce a new Model 2 today, or some kind of new model vehicle today. Barclays thinks that they're going to announce the basis for the Model 2, especially given that Tesla right now is primarily positioned for the luxury market. And they say that in order for Tesla to actually achieve that 20 million volume number that they're trying to achieve by the end of the decade, or at some point in the future, then they need to have some kind of $25,000 vehicle. Again, my take is that's already the Model 3 and just reducing the cost there. Now, they have a different opinion. They base that opinion on Elon Musk suggesting that the vehicle will be smaller than the Model 3 Model Y platform, and it will shortly exceed the production of all of our other vehicles combined. I think they mean surely here, but anyway. Elon Musk implied in the Q3 earnings call that Tesla will aim for a 50% cost of goods sold reduction. And Barclays here is suggesting they think they're going to see somewhat similar of an investor day today, like what we saw at Battery Day. Battery Day is basically where they showed like pictures of the batteries, the 4680 cells, and how they're able to increase the efficiency of these batteries while reducing costs. Now, I'm a little skeptical about how great some of these things are because the battery is bigger, right? Like, of course, a battery cell that's larger has 5 times more energy or 6 times potentially more power. It's a bigger cell. You know, it's kind of like going from a C battery to a D battery. So I'm a little skeptical there, but I do think they'll get some kind of marginal improvements, like, you know, maybe 16% more efficiency or whatever. We want to see, is today going to be a realistic path to potentially lower costs of production? Are we going to see more gigacastings? Can we do the whole, you know, can we do the front, the back, and the bottom, not just those in via gigacastings, but can we do bigger vehicles? Like maybe vans, like Sprinter vans. Can we cast together Sprinter vans from Tesla and then have full self-driving Sprinter vans? I love the Sprinter van, by the way. I think Tesla needs to get in that market. There really is no mommy car for Tesla, by the way. If you have 2 kids, best case scenario, you have a 5-seat Model X or Model Y, and then you actually have some trunk space. But if you have any more than 2 kids, or you have the 7-seat option for the Model, or even the 6-seat option for the Model X or Y, you're screwed. Your trunk space goes down to 0. You ain't putting a stroller in. As soon as you have a 3rd kid, you're screwed. There is no 3-child mommy Tesla car. You need to go to a minivan. And personally, I think that sucks. Don't get me wrong, I'm not trying to offend minivan folks. We own a minivan, and it's the most functional car we have. When we got to take the in-laws, the kids, me and Lauren, we got 2 kids to the airport and have all our luggage, the minivan works. But as soon as we have one other kid, we're screwed. And we have to have a Sprinter van, which I'm really excited about. And Lauren's like, I don't know, man. I don't want to drop my kids off in a Sprinter van. I'm like, this is why we need a mommy car. Anyway, that's not a minivan. But anyway, they talk here about cost reductions coming to batteries, potentially increasing scale, vertical integration, structural improvements, structural castings, manufacturing improvements, and trying to reduce manufacturing floor space by 50% for their 3rd-gen platform. Now, it's worth noting that they are looking at potentially announcing today the Mexico Gigafactory. That would be about 3 hours from Giga Texas. The Mexico Gigafactory is expected to see about $1 billion of CapEx investments soon and up to $10 billion of CapEx investments over time. We actually also just got this update here that in addition to potentially announcing an actual gigafactory in Northeast Mexico, now there's an update just now coming in that Tesla is considering opening an electric battery plant, not a vehicle plant, in central Mexico. So not just a gigafactory in Northeast Mexico, where remember in California we're paying like $20 an hour for workers. In Texas you're paying like $15 an hour for workers. In Northeast Mexico you're paying like $3.40 per hour for labor in Northeast Mexico. Some people are like, oh my God, that's exploitation, but realize like capitalism that brings more work to those areas drives wages up in those areas, so it's actually helps those areas get wages up. But anyway, the United Auto Workers Union, by the way, in the United States is like punching the air right now. They're like, damn you, Elon Musk going to Mexico. And that's because the Inflation Reduction Act, which is important for capitalizing on that $7,500 vehicle tax credit, which you have over here and Barclays mentioned as well. It means that Tesla has to source its battery materials from North America and then assemble the stuff in North America. Well, look, lo and behold, new Tesla Nuevo Leon plant could create up to 6,000 jobs. Battery plant in central Mexico. Fantastic. So again, lower costs for Tesla. You help increase wages in Mexico. You have a substantially lower cost of doing business. And you meet the benefit of the Inflation Reduction Act. Now, maybe that wasn't the political intention. Maybe the political intention was to have Tesla manufacture stuff here. But instead, they're now doing it in Mexico because they can. But hey, that's the politicians' problems. And that's exactly why the United Auto Workers Union is like, punch in the air. Anyway, here's an example of what Barclays thinks for forecasts. Current Model 3, looking at a cost of goods sold at about $27,900 minus the battery, excluding the battery. The Model 2 low-cost vehicle could have a cost of about $16,500. Boom, baby. That's exactly what I've been talking about for weeks on this channel. That in order to have a $25,000 vehicle, I mean, it's not hard to do the math. You got to be sitting at somewhere around $16,000 for COGS. Now, Barclays actually thinks they're going to announce something like this today. Now, what they do think, though, is images of the Model 2, probably not going to happen. So they think it's unlikely that there'll be images of the Model 2 because they don't want to cannibalize current sales. And that's, again, why I think it's more likely that Project Highland is the Model 2. In other words, the Model 3 is the Model 2. It's just the new Model 3 is just a cheaper version that you could sell at a lower price. Project Highland vehicles in camo have been spotted, covers over the front, back. As far as the Model 2, we don't expect Tesla to show a vehicle at Investor Day, as this could risk cannibalizing the current demand. And lastly, we assume the Model 2 will be a different model than the 3Y platform. I personally disagree with that, but we'll see. We'll see. I mean, I'm willing to be wrong. I don't mind being wrong. I do think if there's a Model 2, it's going to be China. I think the Model 3 is the smallest thing you could sell in America. And I really took that to heart when I talked to Brett Whitten from ARK Invest. Type that into YouTube. Meet Kevin, ARK Invest. I just interviewed Brett in person in Santa Monica. Beautiful, by the way. It was a little chilly, but it was beautiful. So we talked about that plant already. Manufacturing will be a central theme of Investor Day. We expect Tesla to point to key aspects of the Austin Gigafactory as the basis for Tesla's manufacturing. Key question here is around other manufacturing expansion. Are we going to expand Fremont, Shanghai, Austin, Berlin? Currently at 2 million units a year. How are we going to scale that to 4, 5, 6? How is that going to scale? Here you go. Our estimates of Tesla deliveries. They actually think that, gosh, that's quite disappointing. But anyway, the annual delivery estimates here for 2025 are a very, very slow ramp by Barclays here. Look at this. This is like a trashy ramp. I mean, they're basically saying we're going to be at about 1.8 for 2023, barely grow in 24, barely grow. I mean, we're growing at like 10 to 15% over here. Like, this would be pretty embarrassing if it takes until 2030 to get to 5.5 million vehicles. We shall see. Anyway, they think the Model 2 will end up having the lowest margins at around 21%, with the S's and X's, like the Plaid, sitting around 32%, maybe the Roadster and Cybertruck up here in high margins as well. I noticed they left off the Semi over here. These are some of the current production capacity numbers for Tesla, or some projections that they have. 4680 progress, the larger of when questions from investor for brand new models will be talked about today. Longer dated initiatives, potentially, maybe we'll hear a little bit about lithium miners, maybe we'll hear a little bit about the software stack, or even the robot, not only robotaxi, but what about the robot? They do say they don't expect much in terms of financial targets. Maybe that's actually a good thing, because if like Wall Street doesn't actually think that Tesla's going to be able to scale at this level, maybe that means the price targets are way too low for Tesla right now. They do talk about Tesla having a margin edge over legacy automakers. Obviously, we already know that. We know that Tesla's lead in creating software-defined vehicles is an opportunity and key differentiating factor. Of course, we know that Tesla EV supply chains, maybe we'll hear a little bit about that. We acknowledge the near-term questions of further price cuts and margin normalization from lofty levels previously. That said, the underlying fundamentals combined with a valuation that appear far more reasonable compared to historic pricing. So even though Barclays is kind of skeptical on some of the forecasts of numbers produced, they actually see Tesla as reasonably valued today. Those who remain bullish see further upside, but have pointed out that Tesla's 2030 volume opportunity is likely above our 5.5 million units, more like 7 to 10 million units. And Tesla might lean into this with its significant cost advantage. So in other words, Barclays is actually already saying like, yeah, our forecasts might be a little on the low side for Tesla's production. You think? Anyway, kind of interesting. And it's almost as interesting as recognizing that, hey, Tesla is now opening up their superchargers to other individuals. I'm really curious to see how that charging is going to lead to congestion, because it's going to take a while to actually see a lack of congestion, I think. Because Tesla's going to take billions of dollars from the government and build more chargers, but the congestion thing bothers me. Although I don't even charge at the superchargers because I don't go anywhere. But where I do go is to course member live streams to provide more value to course members every single day. And you should join that using the course member flash sale today in honor of Investor Day, which is going to be the best price guaranteed going forward, because prices will be going up after today.